Whether you're struggling to grow your business, take advantage of bigger projects, or just remain afloat during these difficult economic times, this episode is just for you. Welcome to Crash Class Banking Basics, brought to you by Ansa Merchant Bank. Unfortunately, the COVID-19 pandemic has already hit small businesses, medium businesses, and rather all businesses very hard. What is worse is that some experts are saying that this is only the beginning. Everybody heard and knows that cash is king. So if cash is king, we're playing a game of chess. Who is the queen? You may hear your accountant pelting some terms at you, and accounting terminology such as, what about your cash flow? Or working capital? Or do you have an overdraft facility? Allow me to explain. Cash flow, just as the name suggests, is money moving in and out of your business. So it's like money flowing, it's movement of money in and out. Although sometimes to many, cash flow could seem as a one-way street. Have you ever driven down that street and only to see cars coming up and beeping at you and you're like, oh my goodness, this is a two-way? Yes, that's cash flow, because sometimes it seems that only money that is going out rather than money that is coming in. What are some instances where money come in? For example, payments from clients, customers paying for a good or service or product. And money that's going out, we understand that. That's rent, mortgage, expenses. So we understand what is your cash flow. Now we are going to deal with some accounts, and it's very simple because I'm going to talk about working capital. During these difficult economic times, sometimes you may hear a banker asking, do you need a line of credit? What are they talking about? Do you have working capital presently? Working capital funds your day-to-day operation and covers your operating expenses. So now you may hear your accountant talking about your net working capital. What does that mean? They're simply referring to your balance sheet in terms of your assets as compared to your liabilities. So when your assets, I'm talking about positive working capital. Come on, let's bring on some positive thinking now. Positive working capital. When your assets is greater than your liability, this is what you call a positive working capital. So it shows that your business has the ability to sustain itself. But due to the coronavirus pandemic, these are perilous economic times. And even for some profitable business, at this moment, your working capital may reflect negatively, meaning to say that your liabilities now exceeds your current assets. What exactly is working capital? The formula is simple. You subtract your current liabilities from your current assets. And when I say current assets, what do I mean? It is not the same as fixed assets. Current assets refer to cash and assets that can be converted into cash within a year. So fixed assets are considered long-term assets. Current liabilities are accrued liabilities or accrued expenses that are short-term. That refers to those liabilities that must be paid up within a year. So those are your debts or your accounts that must be paid within that year. What are some of those? Like your wages, accounts payable, salaries. These are all short-term liabilities that a business must pay within 1 year. To ensure positive short-term financial health, one must ensure or aim for their current assets to exceed their current liabilities. Now, what exactly can happen if your current liabilities exceed your current assets? That is a deficit. And a deficit is like the death of a business. What happens is that you have restricted cash flow in that business. In such a case, one cannot pay or honor their credit and pay creditors. Even profitable business run into deficit. Debts, raw materials, amounting, and there is no cash or limited cash in order to sustain such a business. What can be done at this time? Don't be dismayed. There's good news. Ansa Merchant Bank is highlighting the overdraft facility. Now, this is a line of credit. Just as the name suggests, overdraft, meaning to say that you're taking out more than what you have. What exactly is an overdraft facility? Even if your account has $0, you can still withdraw cash from that account. So it goes against all mathematical reason, because nothing from nothing, you will say, is nothing. Yes? But in an overdraft facility, this is a line of credit that allows you to withdraw cash from your current account that exceeds your balance that is available, even if your balance is $0. So in such perilous economic times, in order for your business to be able to stay afloat, think about it. We are on difficult, turbulent waters right now. And in order for your business to stay afloat, you would need the king of the business, that is cash. And this line of credit will allow you to sustain your business or even just a bit of life support for yourself. Overdrafts are usually used to ease the pressures on working capital as a backup for unexpected expenses. They are a form of finance for business that experience a fluctuation in working capital. So essentially, this line of credit is attached to a business account or a debit card that allow businesses to draw on money that they do not have. So businesses then only need to pay the interest on the amount of money overdrawn, which makes it a valuable form of working capital. So what exactly can an overdraft facility be used for? For example, you can pay employees, you can purchase stock, you can settle invoices, and maybe any other short-term or current expenses. You heard the many advantages of having an overdraft facility, and you may be asking, then what are some of the cons? Well, there are interest rates attached to such a facility, as well as fees. I mean to say, what your granny would say, nothing good ain't cheap, or nothing good is not free. We are now faced with a new problem, that is the evolving landscape of liquidity management, and now we have to stay ahead. Knowing and understanding facilities that can be used can mean the life or death of your business. For businesses that are now facing office closure, the immediate necessity is to gear up to support employees to work from home. Businesses facing retail location restrictions or closure, the first priority is to find some way to keep revenue flowing or embrace alternative business models. In any case, the more effective a business can be in reorienting the operation, the greater the chance you'll continue to bring enough money to remain in business. Can your business truly survive during such perilous times? Call Ansa Merchant Bank, and as the name suggests, we have the answer.